You are watching Market Watch, the brief overview of the key events from the world of finance. The world's largest economy grew by 5.2% in the third quarter of 2023, exceeding the preliminary estimate by 0.3% and the previous quarter by almost 2.5 times. This is an important signal for the Federal Reserve, significantly reducing the likelihood of a rapid return of inflation to the target level of 2%. But despite this, the yield of U.S. government bonds and, as a result, the demand for the U.S. currency are declining, indicating that investors do not believe in the Fed's willingness to tighten monetary policy. It should also be remembered about the active discussion of the approaching recession, which is likely to occur in the first quarter of 2024. Receiving any confirmation that the fourth quarter will not be so successful may strengthen the sale of the U.S. currency. A gradual decline in the yield of U.S. government bonds will reduce the inflow of investments into the U.S. currency, as well as increase interest in undervalued currencies. One of these currencies is the Japanese yen. The greenback against the yen is still held at historical highs. At the moment, the U.S. dollar to Japanese yen currency pair is trading approximately 13% above the current year's minimum and 45% above the 2021 minimum. Therefore, it is safe to say that this currency pair is overbought and, as a result, there is a high risk of a part of the capital returning to the yen from the U.S. dollar. The decline in U.S. government bond yields increases interest not only in undervalued currencies that have been actively sold in the past few years, but also in gold. The main difference between gold and the Japanese yen is that gold is trading near historical highs. Nevertheless, analysts of the largest investment banks do not rule out updating the highs and further growth in the medium term. A bullish scenario can be realized if there are real signs of a recession in the United States, which in turn will significantly increase the likelihood of monetary policy easing. This is what is necessary for the further growth of the value of the precious metal. Unlike the foreign exchange market, gold and oil, the cryptocurrency market lives its own life, or rather expectations. Investors are not affected by the policy of the Fed because they are focused on the decision of the U.S. Securities and Exchange Commission. After all, if the decision turns out to be negative, which looks unlikely, the market may plunge into darkness. In this context, it is necessary to understand that the growth from 25,000 to the 38,000 occurred on expectations of the appearance of ETFs. And if these expectations are not confirmed, then all these investors will want to return at least part of their funds, which can provoke a really strong wave of decline. Nevertheless, this is an unlikely scenario. Even if we consider a negative scenario, then most likely it will consist in another postponement of the date of the decision on the investment fund. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.